Good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the senior strategist for 𝗀𝗶𝗱𝗲. Today is Monday. It is the 2nd of August. The market's going to open up in about 2 hours, but I'm an early bird. Just wanted to give you a nice heads up about what to expect today and for the week ahead. Now, we're going to open up higher right now. The markets are not random. They're up about 120 points on the Dow. Anything above over 80, 85 is not random. We're definitely not random. The Nasdaq is seeing big gains. The S&P is seeing big gains, and the Russell is seeing big gains. It's one of the first days I've seen in the last several sessions where we've actually had a market where everything is bullish or everything is bearish. In this case, everything is bullish across the board. In terms of news for the week, we've got Redbook. We've got manufacturing data today at 10 o'clock. That's going to be really important in light of the data that came out overnight from China, which I'll talk about in a few minutes. We've got the petroleum report. We've got international trade in goods and services. That's going to give us a really good indication of how inflationary pressure is hitting imports and exports. We've got jobless claims and employment data. Now, we don't have the GDP and FOMC like we had last week. Wow, what a week. But it is going to be an interesting week, and we're going to see more of the earnings play into the market this week than we did the last few weeks. I think we had global economy, a real interesting issue with the Delta variant taking place. But I think this week, unless the Delta variant really takes hold of the country, and I don't think it's going to happen this week, I think earnings are going to be the major factor, and China. Speaking of China, oh boy, there's always something with China. China reported a slowdown in manufacturing activities, and the countries are continued to be hammered by Delta variant. But Fauci said that it doesn't look like we're going to have a close down here in America. He said it over the weekend, and he's a pretty conservative guy. So far, 89% of all the earnings that are coming out are beating expectations. Yes, the estimates have been lowered to death, but it's the first quarter. The companies are standing on their own, and the earnings estimates and the revenue that's coming out is just fabulous, and I mean just fabulous. Gains in China followed data released Saturday by the National Bureau of Statistics showed that the Purchasers Managers Index fell to 50.4 from 50.9. Anything above 50 is expansion, so it's a little bit of a hiccup. On Monday, manufacturing survey issued by business magazine 𝗧𝗴𝗀, remember they're ahead of us, puts July readings at 50.3. down from 51.3. So they're doing worse, but they're still moving forward. They're still expanding. Officials' figures was the lowest since February of 2020 when a lockdown to prevent the spread of COVID was in place. Analysts have expected a smaller easing of manufacturing activities. And again, look, it's 2 steps forward, 1 step back, but at least we're moving forward. We're moving ahead of time. We're moving in the right direction. China is also dealing with an outbreak of the Delta variant, like all other countries are, or most countries are, which has already been running rampant in many other nations in Asia. Traders are also watching a crackdown on Beijing on Chinese tech, and I think that was one of the biggest factors we were looking at last week. Now, this week, we still have a fragmented market. I mean, I want to show you this, and again, I'm going to keep showing you this till you're tired of it, but this is really what the S&P looks like. And people are emailing me up in arms saying, Roger, what are you talking about? Folks, this is what the S&P really looks like. This is the equal weighted, EW, equal weighted S&P. This is where every share of the spider gets equal shares. Though it is making higher highs, it's not really all that bullish, right? I mean, it hasn't gotten higher or just now gone higher than we had in a few months back. This is what the SPY, the capitalized weighted SPY looks like. Look at that. Much different, right? And look at the mid caps. And I showed this to people last week. People are like, I don't know about this. Look at that. It's just barely above the 50-day line. So the market looks a lot more like this or like this than you are led to believe right now. And that means we've got to be very careful. And also remember, the market is fragmented. For example, technology and consumer discretionary, they should be next to each other like this, just like industrial and basic materials finally are right now. But typically, you'll see consumer staples and consumer discretionary away from each other. They're not next to each other. They're not friends. You'll see utilities and consumer staples next to each other. But typically, consumer discretionary is next to technology and communication services. So this is telling me the market is out of whack. And that one of the reasons is because technology companies that are dealing with a lot of consumer discretionary, like Apple and Amazon, they're doing very differently than, they're acting very differently than true tech companies like microchip, like semiconductors. So again, you've got to be very careful right now, especially with the market being fragmented. And I mean, I want to show this to you because this is really important. And I go through this, but I don't expect you guys to watch me every day. So look, stocks trading above $2, only 38% are trading above the 50-day moving average. That is a bearish bias. That's not a bullish bias. And if you look at the S&P, if you look at the Nasdaq, and I showed this to a bunch of people last week, Nasdaq 100, 73% of stocks are trading above the 50-day moving average. But if you look at the Nasdaq composite, the number is like 44%, 73%, 44%. I'm telling you right now, this market is fragmented, and that means we've got to be very careful because markets don't trend smoothly till they pull back from a fragmented state. But I still have 1, 2, 3, 4, 5 stocks, one ETF, 4 stocks and one ETF that I'm liking a lot right now, and I believe will still have substantial upside. One is the semiconductor ETF. This tracks all the semiconductors. Look at how choppy it's been lately, and it's finally breaking out. Remember, more horizontal, higher odds of a breakout to the upside. I like the SMH right now quite a bit, a lot more than individual semiconductor stocks. Then we got Honeywell. It's an industrial stock. I like this baby ascending triangle. Baby ascending triangle. Don't you love it? Baby Yoda, baby ascending triangle. There we go. Love these ascending triangles. Flat top breakouts after a mild congestion without a rise in volatility. I like it. Also, solar is starting to come back. Look at this stock, Enphase Energy. It's finally the 50 days now above the 200-day line. And although if you look at it long term, it still has a lot to go. If it breaks out above this 195 level, this stock is going to go higher. And I like these stocks, and I like the fact that the 50-day is finally trading above the 200-day line. That's giving me hope for upside on the solar stocks. Next one is Protagonist Therapeutics. You don't think they could have picked an easier name? Clinical stage pharmaceutical company. Proprietary platform focused on discovering development, peptide-based new chemical entities, significant unmet. It's a biomed stock. I'm not a doctor. 200%, 500% return, 200% return over 3 years and 1 year. The stock is looking really good right now, and I like how it's looking technically. And while COVID is going to be running wild, biotech. Congestion breaking out from a congestion. I like what I'm seeing right now. There's a reason these stocks are doing well right now. And I like how volatility is just now starting to get higher. And last but not least, Illumina. Again, we've got a nice little flat top ascending triangle. I love flat top ascending triangles. Low volatility, flat top breakouts. And if you look at Illumina, what does Illumina do? Healthcare, biomed. That's what I'm talking about. So we got semiconductors, we've got industrial, and we've got biotech, and a little bit of solar. But I like this Illumina quite a bit. Now, I found out of 125 stocks, the best stocks and ETF that are breaking out but are still congesting. So the volatility hasn't expanded yet, which means there could be substantial upside. Overall, be very careful. Pay attention to this Delta variant. If it's spiking, it's going to cause boring stocks to start rallying again because defensive stocks love when people stay at home. That people stay at home, they start accumulating consumer staples, utilities, alcohol, tobacco, all this other good stuff that starts rallying when there's a virus in play. And the stay-at-home stocks. So keep an eye on that. Also, the market is fragmented, so tread lightly. Tread lightly, all right? Folks, before I let you go, I've got something important for you. There's no secret that Main Street investors are fighting. Yes, they're fighting an uphill battle against Wall Street's automated trading machines. These supercomputers can execute thousands of trades in a matter of seconds, triggering massive stock runs before investors even have time to blink. But that unfair advantage, it ends today, right now, immediately. Now, everyone, and I mean everyone, has the opportunity to make the same lightning-fast profits as the pros on Wall Street, thanks to a newly developed technology called Storm. Folks, you're going to love this thing. With Storm, members discover which stocks to get in on and precisely when to get out. Are you ready to learn a brand new strategy? Click on the link below to learn more about the Storm. You want to get in on the Storm right now. And I mean right now. Are you ready? Are you ready to make sure? Are you ready? Are you ready? I hope so, because I'm ready for the Storm, and I hope you are. Folks, make sure to like this video, subscribe to this channel if you're watching on YouTube, and make sure to stay ahead of the market by being the first to be notified when I post my next video just for you. I'll talk to you guys soon. Have a great week. Remember, it's Monday. It's summer. Be careful out there. It's the first week of August. We got to really tread lightly. All right? Bye, guys.